Greetings, market rebels. Welcome to this week's macro measure video combined with the old trustee sector situation video. And we're really going to be ripping through, I think, today. I'll do my best to rip through all this. Anyway, it's Friday, March 28th, 2025. It's probably just about 20 minutes or so before the close of trading for the week. There is our trustee market rebellion disclaimer and our trustee intellectual property rights notice again. And then I'm just going to flash this up there. This is last week's macro measure sector situation. I did some highlighting on here. We've got pink to kind of emphasize it, and then I made it super garish with the emphasis on the red sections. So for example, mixed bag. So we came in and we had, let me get the laser pointer going, very quick review here. We came in and we had a news neutral, most likely scenario was really, again, trade what you see. We basically argued that there was too much of a case to be made on both sides and that we had balance that way. But there were concerns still, even though we could see a way out of it, right? So that was basically the message of last week, the message that no one really wants to hear. But really, until Thursday, we were really close to unchanged, I think, for the week in SPY until Thursday. So essentially, right, you got a bunch of attempts to rally and you got attempts to like back off, but it didn't really turn into something bigger until today. And so you did have a mixed bag. It was kind of balanced. And I guess the news really has done it again. It seems like in a couple different ways. I guess the semis kind of news and the Trump type stuff that we've talked about. When I mentioned that on cocktail hour earlier today, that again, it's not a shot at Trump. It's not a pro-Trump comment. It's just the fact that Trump is ostensibly this disruptor or a source of disruption. And that just, in my mind, creates uncertainty for investors. And the market typically does not like uncertainty. They like to bet when they think they know how things are going to play out, so to speak. So that's why I've got politics aside there. But anyway, we noted that really the late burst on Friday seemed like lipstick, but you never know. Anyway, that kind of turned out to be that way because that didn't really deliver much more than one more, I think, good session, and that was it. So they turned that into something, but really in the end, they kind of got all washed away. I'm not going to belabor the rest of it. Teetering came up. I don't think I mentioned what reference that was. I think I left that as a little secret, but that has to do with a Val Kilmer film from the 1980s by the guys that did the airplane movies. It was called Top Secret, and it was basically a spoof on World War II flicks, like the Steve McQueen one, The Great Escape, combined with an Elvis spoof, combined with almost like a Hogan's Heroes-esque type thing. And that they did their thing, and it's just really silly movie with really funny Val Kilmer stuff in there. Anyway, it was way back when. So we came in with DEF CON 2 or 1 last week. We just kind of emphasized that, again, you got to stick with that Esterhaus warning, which is essentially the same thing as 2 or 1, but just a little different only in that it just means be a little careful. It doesn't always mean like you really have to be ready to get super defensive. Probably just be a little more careful than usual, or at least somewhat careful, more careful than usual. Talked about the Trump stuff, talked about this. Again, these on sale players, they came in a little bit. They got the SPY to really try to tap that underside of the 200, or other things did at least, and that got rejected the way that folks talk about it these days. So that failed to really retake the 200. Not a good sign. We did get gap closures way back when, but we got no bullish trampoline. We still haven't had it. So that's really it. It was sort of payoff time, though, in the end, because payoff came late in the game. Here it is on Friday. You've got 1 day left in the month. You've got 1 day left in the quarter, and things are ending on a rather poor note for the market. So I'm not going to go through all this right now. I may try to review this at the end, but I really want to probably just get into the charts because I think that's what people really want to discuss. It's just that I feel like doing that without context to me is dangerous, and it's just not as complete as it should be in my book. But anyway, I'm at DEF CON 2 or 1, to say the least. It's good that we've been there the past 2 to 3 weeks. I think it's been, and with the turmoil that's unfolded. And I think we even went there right around when the whole sell-off began. I don't know if we had it on the whole time, though. I just can't remember. Anyway, the point is, right now the technical mosaic is just not good. It's simply not good, and we have this news ticker situation with Trump doing his possible different things with China, different things with this country, that country. Again, it may be bad in the short run, good in the long run. It may be bad. It may be good. We just don't know. There's arguments to be made. I listened to a couple by folks that are, I'd say, pretty well respected with long-standing track records on making comments on things like this. They weren't necessarily talking about Trump tariff type stuff. It was just the whole concept of tariffs. And I think there's arguments that can be made. So it's just not an easy, I don't find it to be an easy answer. And I was an econ major. I think it's a little more complicated than the basic takeaway that people have had for years, which, has been tariffs bad. Um, that's been the predominant way of looking at it. I think if you're using them to maybe make it a level playing field, maybe not so bad. We'll see. Anyway, the macro situation, not so great, not horrible, not great. But macro could change anytime. There are some still very worrisome things out there that may impact much more strongly than they have. The NVIDIA SMH story, that's just gone up in flames. I'm just saying that's toasted. I think that we've been mentioning that now for a while. That story started to get taken more seriously. We saw the Microsoft news where they're walking away from the data center thing, and other companies, I think, had said something along those lines this week. So again, we're leaving this highlighted stuff here. You've seen it before. I might try to make this a staple of just saying, well, where are we? Because that's one of my big questions every single day. And so I want to make it clear because I feel like that's what the video is somewhat dedicated to each and every week, but I don't really make it point blank clear, and that's my fault. But I obviously think you're in a corrective phase right now, and it's threatening to worsen, but it could double bottom. We have to look at the technicals, and you can't rule that out. And I think that's where you could have this bounce squeeze on news. If the Trump tariffs kick in full force, let's say on April 2nd, which I think Trump is calling Liberation Day or Tariff Day or something along those lines, basically, that could be discounted in. Now, I don't know if it's fully discounted in. It could be short-term discounted in. It could be enough for the gang to do the old turnaround Tuesday, Wednesday type thing and double bottom it and go. I don't know. We'll see. And we have no idea what news will be brought in over the weekend, but I think that's what you're in. I mean, you're definitely still mired within this corrective phase, and you just don't know if it's going to launch another leg lower or if they're going to be able to hold it and bounce it at least temporarily. Remember, as of right now, AAII sentiment is still really poor. It's not as bad as it has been, but it's very poor. We're back in extreme fear on CNN. These are two imperfect things we cite from time to time because they're readily available and accessible. You can go check those out yourself. Anyway, the news neutral most likely scenario is, again, trade what you see due to the squeeze on news potential from a double bottom-esque type scenario. So I'm not forecasting on it. You just have to note that could happen. So I would say that there was a lack of lift. We had said that we thought the spies could kind of trade up to 574-ish as our main number, maybe 575. They traded a little beyond that to 576 point something, and then they have rolled over pretty darn hard since then. So our number ultimately was not too far off. It was more of a reasonable number, not the ultimate number. We kind of do things incrementally, right? So we were waiting, if it got there, we wanted to see if it could then get to the next retracement level that had confluence if we could find one. And I think that was another 10 points higher. And so it didn't even sniff that. And we've rolled over and we're back in retest of the lows mode. Anyway, breadth, terrible, bad turns. For bulls, I think it's now or never. And you're really close to a now or never moment. So that's why I'm calling it. And so it begins, because if they let another 1 or 2% downside materialize below the lowest lows, that could still be a fake out. But if you start closing down there and there's really nothing for them to hang their hats on, you see this sort of flight to safety, the way we have at times where you start to see bonds get bid and things like that. That could usher in another selling wave, another leg lower. So anyway, we should kind of wrap things up. This is going to potentially create a poor weekly and a poor monthly finish. And I think you have to take that seriously when your larger picture charts start to really flounder, and they are. And I think your trends are really at risk. And I added the most basic chart I could, and took away virtually everything off of one of the charts that I had, so we can take a look at that. But the market tilted strongly towards bearish at week's end. But gang on a gang, right? So you can't get locked into this thing's about to implode. It's a mortal lock, lead pipe cinch type stuff. It could be. It's just that they prey when people prey on people that trade on obvious levels in oversold conditions. And then when there's a news event driving it, and you have all that in place right now. So you just can't rule out that there could be a false breakdown before a more serious breakdown, if one is to come. I mean, that's not an uncommon scenario. So maybe the first time down supports like it typically should be assumed that it will. But you have to evaluate this inside of the new news environment that develops over the weekend and coming into Monday morning session. So I would say you just got to trade like a disciplined robot until you really are convinced that we're in that breakdown mode and you're on your way with another leg lower. Okay, so that's what I would personally do. Just keep it that way. And if you do get that strong second leg, and you were smart and you rolled quickly and all that at the start of it, it will not be the worst thing that ever happens to you, probably, right? So let's get into the charts now. We covered all that. It really wasn't that bad. We're not too far into the video, and we'll pretty much spend the rest of the time doing that. Let me just get this stuff out of our way. We don't need PowerPoint anymore. And I can bring up a different screen, which should be screen number 2. Screen number 2. Okay, so this is a basic chart of Exxon. Okay, it's a counter trend idea I just put into our log for UOA Pro, but I'm not in love with it, but it's kind of a weird thing. It kind of actually covers one of our points on the PowerPoint this week that I skipped over, which is that we haven't really seen a lot of bearish plays popping up. We have seen very few index ETF plays. We did see a QQQ one that hit earlier this week, which I was fortunate enough to get to our system. So that's good, because that's fallen probably like 20 points, so 5% since that player showed up. I'll take that, in a week's time, every time. I wasn't expecting it to. I love that it showed up when it did, because if the market failed to really do much more retracing, I thought it was great to have in our log. But at the same time, you don't expect just such a rapid plunge, but they nailed it. When you can see right here, and hopefully my arrow is showing up on here, but you get that tap of the 200 SMA from the underside. You can't get through there. It was a very feeble attempt. There wasn't even, a fake out really above there. Pretty much textbook rejection, if you will. And that's really right at that, I think that 23.6. So we were talking about that, I think, lining up. So, or we should have. Anyway, you're getting really close to the possible retest. Remember, you should assume that support will hold. So the very first touch of it, you almost could say you got there. So it can't really be a shocker that maybe you didn't plunge right through. It probably would take really strong news, material, what I call material news, to really push this through convincingly. And you have to be just concerned about the fact that you don't want to get caught into some shenanigans here where everyone's watching it. Maybe the second leg's developing. They get things looking ugly, and we don't know, maybe on Monday morning, and you don't know that the fate of the whole tariff thing yet. It still kind of hangs in the balance, and we don't know exactly what's going to be announced and all that. So be prepared if you want to. I talked about the collar strategy. I talk about it too often. Probably a lot of old time market rebels are probably like, oh no, here he goes again on the collar. But just if you're newer, it's such a simple, just sort of like brilliant, elegant strategy you can add at any time to your longs, and you can unpause. I call it the pause button. So you can unpause at any time. And if you do it the right way, it should be reassuring and not painless if the market or the stock starts to move back up on you. But you'll be protected fully if it doesn't, and you'll be doing it on the cheap. So go see Bill Johnson, Stu, or Scott, and you'll get dialed in on that. And I don't think you'll ever regret learning that. I really don't. Anyway, um, this is not clearly not looking good. You can see that the momentum readings are not nearly as bad this time around at the same level. So some people are going to say, well, I'm seeing positive divergence. Can't argue that you are not, basically, but at the same time, it's not over yet, right? It's not over yet. And usually, right, you're going to need something. We do have the news event or news date, right, with uh, this day that Trump is calling Liberation Day or Tariff Day or what have you. So that's a big emotional date known by pretty much everyone that's serious in the markets in terms of short-term trading. So know that that could be a flashpoint, and that's going to come. That might be indicated on Tuesday. Things can change, but that might be indicated on Tuesday, maybe Wednesday. I don't know exactly the timing on it. However, if you look at this, you have to be concerned about it just technically because that's such a feeble rally. Market breadth did not really improve much and come along with it. So that screen is right here. We may as well glance at that while we're on the cues. Not that that really changed the data, it doesn't. But you can just see that things have gotten worse, right? Normalized new lows are spiking. You've had really weak performance from new highs for a while, really since this whole thing started. As we noted last week, breadth took a turn. It's done it again. Just not really acting well. You got the problem with your leadership area, which we also had a nice SMH hit came in as well. So we were able to get a bearish SMH idea in this week in UOA Pro because we saw some bearish paper, and you can see the way it's acting. You can't be surprised that somebody would add that idea to a log with the way that these charts look in here, and with the way that that story in NVIDIA is potentially being undermined. And we mentioned that, and I told you I couldn't really talk about it much because I really am not an expert on all that type of stuff or even close to one. But there does seem to be some real questions about some of these claims and the trends of things depending on the latest development in AI or chip technology or approaches that players are in those spaces are using. So I don't know exactly what it is, but remember, pretty much everybody owns these things, and they're for good reason, but it all became super hyped and super popular. It almost became, it doesn't get much better than that, and it didn't get much better than that. And now you can see that your SMAs are all downsloping, right? Pretty much every one of them is now downsloping, even the long-term ones like the purple 200. So, usually you don't get good stock performance when you're getting that kind of SMA profile. I'm not a big SMA player. I do think that they affect things. I'm not saying they don't. It's just that I think there's better ways to key off of for entries and exits and things like that. But I do think they're helpful for in the ways that we usually talk about them, right? In terms of support and resistance, the kind of mindset and how things change when you fall below the 20 in the short run, the 50, the 200. The other ones can also act as important support and resistance at times, the slopes of them at times, all that type of stuff. So even I think we even talked about if they did rally SPY, that it and some of the other things we were covering would ultimately run into downsloping SMAs, and that makes it hard. And that happened kind of up in here, right on some of that action. You hit it again in here. You hit it again with the 20-day sort of in here. So yeah, it's not great. And according to the seasonality, right, we're supposed to be turning around, and we may, and all that, but I don't know how you can like this right now. I think your best hope is sort of a double bottom-esque situation, which could happen because of the obviousness of the date, because of the extreme sort of bearish and persistent bearishness. But the flip side of that argument is you don't normally stay this way for a while. Well, then why are you? Why are you staying so? We've mentioned this too. Why are you staying that way? And I think the reason why is because leadership's lost. There was overvaluation. The market needed a break. There's a lack of clarity because the Fed doesn't seem to be riding to the rescue in a big way soon. So liquidity isn't what it was. I haven't heard anyone claim or lament the fact that the Trump Treasury Department is flooding the market with liquidity like Yellen's did supposedly, which seems to be true. But again, I can't say on that day to day. But lack of liquidity, lack of lower rates, really high prices and things for consumers, job market not chugging. The Trump stuff seems very long-term oriented, where it's almost meant to and expected to have a positive long-term impact. Reshoring jobs and things like that in manufacturing, I would think that has a positive long-term impact. Certainly, what the DC players and Wall Street players and all the rest have done to Americans and essentially Main Street American small towns is to crush them over the last really, I guess, 35 years or so, ballparking it. And we know the aftermath of that. People have struggled. Their wages haven't kept up, and so on and so forth. So I would think the opposite of that would maybe help. So we'll see. But I think it's like I keep going back to, it's short-term disruption, maybe long-term positives, maybe. So we'll see, because who knows how it plays out if it gets undone. Who knows, right? The war between the kabuki theater between the politicians is tough to predict. Anyway, this could be the start of a leg lower, another leg lower. We talked about that. We talked about ballparking this move lower at, I think it was around 511. Let's go get a little bit more time in here to take a look at that, because if you're wondering, well, how bad does this get? Where do we go to? I think what we have to do is go back to, this should be 23. And I'm going to lay a fib on here. Well, you know what? You can see that we're below the 200. We tried to rally back above it. It's a little murky. Let me make it a little bit better. We tried to rally back above it. We failed, and now we're attacking potentially or retesting these lows. And we just remain oversold, ugly, terrible, blah, 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 blah. So there's not a lot of love for equities at the moment. And another leg lower, we think, would take us down to about there. So let's take a look at where the retracement would be. And I've got a new chart, the latest technology for that. And that new chart is, where is that new chart? Should be 7 charts on here. I guess it has to be this one by default. Yep, that's it by default. So this is my new technology that I'm unrolling this week that gets rid of everything, just so we can look at things in a better way. And what I like to do here is we'll even just take this low, because there was a nice corrective phase that preceded that. And what we'll do is we'll just add a fib from here. I hope this is the think or swim way to do this. I mean, oops, nope. I have to do it. I think I might have to do it from the top to the bottom to see. No, wait a minute. Am I doing this wrong? I always get this confused, and you all know that, because I usually do a lot of this on TradingView. Jeez, something's really, really wrong here. Okay, we're almost there. So let me just adjust these. 613.23. We weren't too far off. And then what's my low back on the lowest low there in 23 before we launched? I remember those days well. That's showing up as 411.60. And is it 410 something? Why can't I get this to expand? Okay, I'm going to put 411.60 for now, and then I'll double check it. Okay, let me pop this a little bit more, make sure we got the right numbers. Yeah, 411.60. So we had said, I think that, and there it is. I don't know why it's coming in there. There's your 50% retracement of this whole move. And so you've got, if you can't hold at 38.2, which would be 536.21 in SPY, then your next level on the fib retracement is going to be near this, near the, let me get a little bit more space in here. We got this. It's going to be near the 512 area. I do think there's you could see that there was kind of reactions around that level a couple of times, and they're the only ones there that we can work with, but they're pretty big reactions. I mean, the low is very close to there when we pulled back. It's 510.27. So right in there it works out, and then 613 down towards this low gives you about that looks like it's about 63 points. So this high in here would be, let's see, 576. Yeah, 576 minus 63 is going to give you 513, I think. And that's going to be right near there. So the math kind of like on an ABCD type thing, that kind of works out that way that you kind of pull back into there. If you get this really strong second leg that resembles the first leg lower. And the other reason I wanted to bring this up is because if you look at this, let's get more perspective here. And if you look at this, right, there's your long term. I think there's your long term trend line since the last really that bear market ended, and then they started to goose things a few years ago in late 22. Um, that would also come in right near there, which is very interesting. So a lot of things I think are lining up right there, and we haven't talked about them all, but a lot of things are lining up that if we do get another really strong leg lower does develop, we're going to I think that there's a lot of reasons why we go there. Now, one other thing I would sort of flash up here, if I do, let's do a 10-year weekly, is that this is starting to look worrisome, right? Because if we try to I'll try to get another line off of here for us. And this is why I've got this chart this week, just to kind of go completely bare bones. But even if we don't draw this as tightly as we could, and we sort of just draw it probably in a reasonable way, I think that's telling you that that particular trend is cracked there. If you start coming in like kind of using this sort of reaction low here, you try to do a decent job on where do you fit this in. I'll even give it the benefit of the doubt and drop it down here, right there. That's the lowest slope we can get to on that. You've cracked that too. So what are you left with, right? At this point, what are you left with in terms of your angular support lines that I think matter personally? And you're not left with much. I'm not saying that there aren't other forms of support and fibs. There clearly are. I think that the 536 makes some sense. There's definitely some reactions around there. You can see those on the weekly where there were highs near there. There were lows near there. You can see how the wicks sort of pile up around there a little bit, and so do opens and closes. A few of those too. So that is a legit area, and that kind of gives you that confluence of different factors that I like to look for. But it's really not, I don't know, it doesn't seem that stout to me. And so the trend is broken at this point. It's really under pressure of really cracking. If you look at it from this point of view, the long-term one, no, that's not cracked. You can still, I think, come down to here and say that you're not cracked. But and then maybe you get that pullback and you get some kind of this stuff that and you take a few months and then or sorry, a few weeks and you start to get back on track. But you have to be concerned about it, I think. It looks worrisome and the news could be the flashpoint and so on and so forth. But we could extend this further. We could do this, that, and the other thing. We can't cover everything, especially because folks are uh, prefer with these videos that stay short. But the point is that uh, this is an area that you got to be worried about because usually, if I put a line here, which I won't, but usually when you crack one that's important and work for a while, a few years, and then you fall under it, it may not result in an immediate plunging, but you're just like the SMAs are telling you that the action's downsloping, you're in trouble, right? So what's normally worked in the market, right? Low rates worked in the market. All the shenanigans the Fed pulled off with hiding things on the balance sheet, all the liquidity they added stealthily at the Fed, all the liquidity they added stealthily at Treasury. I don't know, but I haven't seen much in the way of stories about these things continuing. And a lot of that that supported equities. And after the kind of run that we had, is it really unreasonable to say we need to correct a little bit more to kind of take out some of the excess? And I don't personally don't think it is. I personally don't think it is. Not that that really matters, but that's just my take on it. It doesn't seem like an unreasonable thing to me. I am certainly not cheering for stocks to plunge, though. I think everything's better when the market's stable to moving higher, and I prefer that. And I think it's much better for trading. But you gotta take the good with the bad, and you got to make the most out of the market that's in front of you each and every day if you're a short-term trader, and that's what we try to do. So the spiders are our main proxy for the market because they're tradable, right? Unlike the SPX, which is not really tradable for most folks. Here's that kind of cleaner look at the Qs, and you can see that it's a very similar situation, maybe slightly worse, right? So that's slightly worse here. What about SMH, right? This is probably even worse because this has been struggling from further back than the Qs, right? And so think about this, like that whole sort of NVIDIA-led ramp that really happened after this strong corrective phase lower when everyone started talking more about AI and the frenzy and really started building. There's SMH, like you're almost, round tripping at this point. And it's been the leader, right? So, and this is one of the arguments I've been making, Ryan's been making. I think Greg's, been saying the same thing. His take is similar. That look, this is, you lose leadership and this story gets undercut, and which seems to have happened, at least to this point, not a good thing, right? So all these things are not good. Let's see if we can get the sectors in here. We took a quick look at most things in terms of breadth, but here's your here's your leadership sectors over here. XLK, XLC, they've completely fallen apart. The rally attempt of the last couple of weeks, it was giving us a little bit of hope, fallen apart. XLE, I think it's been its own thing more and more lately, but usually, right, what this has done is broken out above resistance or towards resistance. It failed to take out that high convincingly. Now it's kind of backing up and testing, I think, a former support level. And I think if you do get risk off in the market, it could pull back a little bit more. This would not be an area that I look at as a place to plunge, because I don't think it really technically wants to plunge. I think technically it looks better than a lot of other places do at the moment. So I really wouldn't seek that one out. But look, the financials, which were also very strong, they're looking a little worse for the wear with a potential lower high put in. Real estate, which they were kind of working back up a little bit, maybe defensively. XLV, they've lost their luster. Even XLP, which was doing really well, that sort of tailed off today. Discretionary, it was trying to act better as well. That's fallen nearly all the way back. Another important one, transports right back on their backs again, very close to the lows. Not good, right? We saw these areas, XLI, XLI and XLB, they were doing better as well. That's fallen apart in a big way. I think this definitely is tariff related too. And here's the XLU, which I've admitted, frankly, that I don't really have much to say about because I don't even know how to interpret it. Days gone by, this would have a little bit stronger of a bid, but maybe because it's turned into more of a little more speculative than in the old days, it's sort of stuck in the mud between defensive players and players that still think that their increased demand for power is going to be still can be there, be a big thing. But the interesting thing is, aside from the Q's hit that I talked about, there haven't really been big hits in, where's that at? Where'd that go to? Oh, I guess it's behind here. There haven't really been big hits in other areas. Let me just minimize that. Excuse me. So I talked about the SMH QBot, the put players there. I talked about the QQQ put players, but there hasn't been that in SPY, diamonds, IWM, which at times has been really active. There's been a couple of stray things here and there, but even the VIX buying, which was really set in March, set in April, set in May, the VIX that's also been subdued of late. There may have been an update last week. We might have had another hit in there last week. I don't recall if it was last week or the week before, but it just tailed off. So I guess those players are content with either what they still own or they cashed out when this score developed here, because remember, they were playing kind of in the mid-teens. So when they were loading up, I'm very interested and somewhat concerned about the fact that the VIX, with the market sort of staring into the abyss, the VIX is not really reacting well for it. Like it's only in the low 20s. And you're really looking, I think, I don't know if it will happen, but you're looking at a possible another leg lower, and the VIX doesn't seem to be all that worried right now. And I think this has become very interesting because without the major put buying in indexes or even major index ETFs or sector ETFs, I'm wondering where the real concern is. It's almost like everyone's bought into, or I shouldn't say everyone, but most have bought into this contrarian way of thinking that does work very well historically. And I myself have a belief in it. So I'm not criticizing anyone, but we didn't really, we were really in the tank on breadth. We're really in the tank on, I mean, I've seen it worse, but you're still really in the tank on breadth. CNN, the AAII, it seems like people are not really taking the another leg down seriously, or they're not concerned about it. Maybe they're just going to allow it to happen, but there's no real serious hedging happening here. So to me, that's concerning. I even think I have that in our notes this week. Let's see if I can get that to come up. I'll just pull in the slide itself. I don't want to have to go and do the old projection. I think I've got, so I'm starting to wonder if this contrarian stuff has become a trap where people are just not worried about it. And because I'm sorry, they're not worried about the real risk that could unfold here because everyone's looking at AAII and better things than that, I'm sure. But things from the prime brokers, other research outlets, things like that, they're telling them, well, in most cases, right, you get a really strong bounce from here. But I think the other change too is that Trump used to be a stock market. I think during a lot of his career, he wasn't really a big stock market guy. He was a real estate guy, and his first term, he was talking about the stock market on Twitter a lot, and he kind of got away from that. So it seems like the stock market and is not the big thing right now. Maybe there's good reason for that. I don't know. But anyway, the point is that having someone who was maybe a lot of people expected more market cheerleading and support for the market, and it's not turned out that way. Just a thought. So I don't know what to say. I mean, I think Trump keeps targets in motion. So he could easily tweet something else or whatever he's doing these days on his own social thing or whatever it is. But yeah, I mean, I'm just there. I think you just can't go to sleep right now on any of this stuff. I would take it very seriously, and that includes even if you're a bear and you think things should fall. I would take that seriously and not go all in and then go take a bathroom break and all this. I would, if you can, right? I'd still get a hedge in. What I mean by that, I should say get a roll in, where you just roll down. I did see a lot of put players doing roll downs, as a matter of fact, late this week. People that appear to have been right about betting that certain stocks or whatnot would fall, they seem to be cashing out, but they're also stepping up, in some cases, stepping up in size. I've seen some very aggressive step ups in size where maybe they had like 5,000 contracts and they doubled that to, or nearly doubled that, things like that, or more, right? Where they went from, let's say, 4,000 contracts to 10,000 contracts or near there, where they really stepped up their size. So they're kind of pressing their bets in a way with what they're doing, some of these players. So that's also interesting. That's something I would share. Um, let's take a look at IWM. I mean, the IWM and diamonds are going to look similar. You can see that's pretty bad. That is on its way. I mean, I'd basically say you're close enough at today's low to just to call this is basically in retest mode because you're really close at today's low to virtually everything but the lowest low. So if you want to call this a cluster low in here, which I would with all those candles, you're basically in retest mode right now. You're very close to spiders. The Qs and SMH are there. We didn't talk about NVIDIA. That one not close enough yet, but it could get there quickly. We know that that's looking pretty bad, but for now they're keeping it under control. It hasn't completely fallen apart. Um, don't know what news may be lurking there. We have to still see on that one. Diamonds, another one where the diamonds are looking right where, oops, I think I could swear they switched this around after all those years of me getting used to it in a certain way. But anyway, not quite there yet. So I don't know. Maybe there's a little bit of go for the blue chips type of thing that's keeping this a little buoyed. Wouldn't be crazy, but I don't think you can like the technicals on any of them. Does it mean that it falls? No, I just think it means you're at much greater risk that another leg could develop and could develop soon. So that's sort of you're kind of playing with fire, and I think the Bulls need to do something and do it quickly, or you start to really put this whole market at risk. And we saw that you're really on the ropes, so to speak, and with another leg lower, the drop is going to be pretty significant. You're not talking 10 more percent, but in some of these things, I think you're talking maybe like, let's see, what would that be? About 7% more, I would ballpark it at in the SPY. And then finally, I think that I would mention that I think I've been saying it's a notoriously difficult area to trade in. It's probably a little short term overbought, but they keep kind of coming after it. I think gold made a new record. Uh, Whatever you want to look at, there's some really explosive patterns in gold and silver. I would check that out. I always try to keep a hedge in my portfolio of gold and silver. I'm overweighted and I've been overweighted for some time. I don't want to make it like I just did it. But I've been overweighted for a couple of years in this because of the things that I saw combined with the way the chart started shaping up. So there's that big kind of cup and handle I've talked about a gazillion times. If you're new, just want to mention that because if this does fire, I mean, it's a very manipulated space. It can be very hard to trade, but if that thing fires, you're talking probably about like a 50% move in silver. I would say higher. I think that's a reasonable projection that you head towards 50. Some people have silver going much higher to the point where they'd laugh off 51. There's a crowd out there that always has that take on it. I'm not saying they're wrong. I'm just looking at it more from from a technical perspective that I think that it could pop about 50% right now. And it wouldn't happen. I don't think it would happen overnight or something like that. I just mean this trend is really strong, and I could see it sort of working its way back up towards this area, which is near 50. Not quite at 50, but I think that that's about where I'm putting it at, if they do start to get their hands on it and it goes. And that's the thing that happens with it. It's sort of like it has its moments where it just becomes very vertical. As you can see, these are monthly charts, and it just becomes like an unstoppable train for several months or a couple of months when it does go. And then it becomes really hard to buy. So I don't know what that's all about. Like I said, I always say the same thing, but I just don't have enough time to cover everything. I just don't. I wish I did. I'd have a lot more fun. I'd have a lot more fun if I were just a researcher and just trying to piece things together technically from, with more data to support maybe why this looks the way that it does, and maybe this is why this is happening, and sort of develop that picture. But I'm sure people have that job, and that's a great job to have. But I've got my hands in other things, and I just don't get the time. And I've got a role now, and I don't want to drone on too. I've got a role, but I think you just bottom line is trade what you see. Know that they can know that they can take bad news from Trump and turn it into a short squeeze, right? So just do the best you can. And the trick to me is to get that quick trim or quick roll in. That way, if they do reverse it on you, you have some profits that are going to cushion you against the reversal. Maybe give you time to get out for even, or maybe a slight profit, maybe a slight loss. Kind of reshuffle the deck for yourself, get a fresh perspective, and then get back into another trade, maybe in the other direction, or wait for your chance to establish a short side play again. Whatever the case may be, you got to do something when you're near critical levels. If you do roll quickly and the market continues to tank, I don't think you're going to be that unhappy that you roll down a little bit, right? It'll still work out quite well if we do get a whole nother leg lower, depending on how long your holding period is. So that's the situations I like where I do something, I feel good if they jam it back up on me, I don't get hurt too bad, and if I get the move I was expecting and I was a little bit itchy trigger finger on my first roll, I still am laughing all the way to the bank. So I want that problem every time. That's what I always say, but it's just we have these things locked in our head because the market taught you that, and I just think that's one of the most important things, because keeping a positive mindset is a really big part, I think, of being able to go to the market every day and looking positively at it and where is their opportunity, and instead of being bogged down by negative thoughts or negative feelings and things like that. So, because it's a tough game. Anyway, going to end on that note. Going to wish everyone a great weekend. I'll get this into Ryan's hands as soon as I can. And I do hope you got something out of this week's video, and I hope that it helps you this week ahead or some week in the future. Again, as always, everyone stay well, and thanks for tuning in.